Welcome back to the Dividend Diplomat YouTube channel. You got your boy, the B, the E, the R, the T, the L, the A, the N, and Y is Lanny. And Bert, it's Birdie. And Lanny. All right, guys, welcome back to the Dividend Diplomats. And we're here to talk to you guys about another crushing dividend stock, not just analysis on one stock, but a dividend stock battle on two stocks.
But before we jump into it, you got two things you need to do right here, everybody. Subscribe to this channel, hit that subscription button below, and like this video. Help us, throw us some love for the algorithm, everybody. That's what it's all about. I work so close to 15K. Hey, we might have already crossed 15K by the time you were watching this video, or maybe not. And if we haven't, help us get there. Lanny, what are we going to do in this video today when we talk about these two companies?
Well, guys, right now, it's currently, what is it, October, is it the 7th or 6th? It's the 6th.
It is the 6th.
So we're recording this here on October 6th. We're going to pick two big dividend growth stocks, some that have high dividend growth right now, that are in the same industry. And Bert's been buying one of these stocks over the last few weeks, really making a big position, strong play. Could be a strong replacement for J&J stock. And guys, these two are in the semiconductor industry. There are not that many players here.
No.
We both know them very well. And I can't wait to talk about both of them.
Yeah, and that's why it's been one of the two more popular stocks that we've talked about on our channel and in our comment section too. We've talked about one, and we've gotten a lot of you commenters asking about the other. So we figured, why not pit them head to head to see which company comes out on top. When we look at these two companies, when we're comparing them, when we do this for any stock, what do? We use the Dividend Diplomats dividend stock screener, 3 simple metrics and 1 bonus metric. PE ratio less than the S&P 500, payout ratio less than 60%. But you know what? We also think there's this range that's called that perfect payout ratio range, which is between 40 to 60%. Were you doing your Pujols imitation there, the 700 orders? Yeah. Wait, we gotta take a minute here. We have now 4 people in the 700 home run club for baseball. That's one of the big milestones up there. It's gonna be like what, when LeBron passes Kareem, just like one of those milestones that you're just not gonna see that frequently happen amongst them all. Sidebars over. Get back into the stock screener here. That third metric, the dividend growth history, where we look at the history, how long they've increased that dividend, and the 5-year dividend growth rate, and that bonus metric, the dividend yield.
So guys, let's get into it right now. It's no question. We're talking Texas Instruments, ticker symbol TXN, the stock that Bert's been buying ever so lately. Why? Because the stock is down, over double-digit percentages right now with the yield that's pretty much at 3%. We'll get into that in a second. And guys, we're talking about Broadcom. Yes, we heard you guys in the comments section. We are putting them head to head to see which one is the best semiconductor dividend growth stock. Two that aren't really talked about too much in the dividend investing community. Broadcom's ticker symbol is ABGO. Again, stock prices and metrics are as of October 6th here at, a nice ripe old 10:15 p.m. at night.
Yeah, so we're about to go through, we're going to pit them head to head. We're going to go metric by metric, stock by stock, and see which one comes out on top for each metric. That first metric is that PE ratio, less than the S&P 500. S&P high teens, that's what it's been in 2022. It's been a rough year, down from the 20s that we saw in the early parts of 2022 and in 2021 at its peak. Texas Instruments, their current price, 166.54. Forward earnings, 891. PE ratio, 18.69. Surely Broadcom will be able to beat that, right, Lanny?
Wow, that's a pretty, it's a nice average price to earnings ratio. Nothing against Texas Instruments, but now ABGO tickers, for Broadcom is stepping in the ring, trading at $479.50. Pretty much 3 times Texas Instruments here, guys. But keep in mind, Texas Instruments is over 150 billion in market cap. Broadcom is only 196 billion, so a little bit bigger on market cap here. Expected earnings is $37.42. That's a price to earnings ratio below 13 at 12.81, below Texas Instruments.
Baby, Broadcom gets the victory there. But let's see. did they win the battle or are they going to win the war? We got to figure that out by looking at the
Let's
other
go.
metrics
Next
here.
dividend metric, then let's find out, brother.
Texas Instruments, $4.96 share dividend. Divide that by 891. That gives you a perfect payout ratio of 55.67. What do you see, Razor?
Wow. Hey, yo, Chica, it's me, it's Broadcom AVGO. Hey, yo, go into the payout ratio of Broadcom. So you had a perfect payout ratio on the higher side, right?
Yeah.
So Broadcom currently pays, and yes, this is a true metric, they pay $4.10 per quarter or $16.40 per share.
Or
Again,
one AT&T.
Yeah. Their payout ratio right now is actually only 43.83%. So perfect, but lower than TXN. Just bring it.
All right, third metric here, 5-year dividend growth rate. Texas Instruments says, we're going to crush this one here. 18.23% 5-year dividend growth rate. To increase that dividend for 19 years. Like, we are so close to becoming an aristocrat. And while we're on the topic here, they just announced an 8% dividend increase in September. So a little bit below their average, Yeah. You get the blue meanie. Is that blue meanie here?
I'm giving you the razor.
Oh, the razor though. No, the blue meanie is this.
Oh, that's your move right there.
That's right there. Sorry. All right. What was Broadcom?
So Broadcom, granted, they haven't increased their dividend yet in 2022, but we heard you with the 8% on Texas Instruments. But last year, come December 21, they actually increased their dividend almost 14%. So I'll have to wait until December this year on what they do. Now, they've only been increasing their dividend for 3 years. So they don't have quite the dividend streak yet, but the average growth rate right now is 15.77%. So slightly below technically, Texas Instruments.
They're both great from that. And I mean, you got to start somewhere with the dividend increase streak, right? You don't just pop out and become a dividend aristocrat. You got to start somewhere to get to 25.
But when the two dividend aristocrats come together, what's the child? Is it already a dividend aristocrat?
That's a dividend king, right? All right, let's look at that bonus metric, the dividend yield. Their yield for Texas Instruments is 2.98%. What's Broadcom, Lanny?
Broadcom, really quick, short and simple, it's 3.42%, so about 40 basis points higher than Texas Instruments.
So let's just run through this here. We're going to put up a chart that summarizes it all. We'll just talk about who won and who came out in each category. PE ratio, Broadcom, clearly trading at a bigger discount to Texas Instruments. Payout ratio, both are great, both are perfect, so it's a kind of a draw, but Broadcom still has that lower payout ratio. Dividend growth rate, average dividend growth rate, they're about the same. Both are over 15%, 5-year average growth rate. That's both freaking awesome. So great job there, Texas Instruments and Broadcom. History of increasing dividend, Texas Instruments, almost an aristocrat. Sorry, Broadcom. 19 is bigger than 3. Sorry. Yield, Texas Instruments 2.98, Broadcom 3.42%. Broadcom comes out on top there.
So, Bert, the question I have for you is, how do you feel about Broadcom right now, given you've been buying Texas Instruments?
Feel great about them. I mean, they're both great. They're both great companies. I have nothing more to really say.
Great stock.
It's when you're comparing the two head to head, Broadcom is clearly undervalued compared to Texas Instruments. Like, from our stock screener standpoint, head to head, Broadcom is showing bit greater signs of undervaluation. That doesn't mean Texas Instruments is bad. It just doesn't mean they're not trading as cheaply as Broadcom. So both are great companies.
Yeah, I think both are great stocks, guys. If you currently don't have too many positions, you're okay with taking on a new position, you're okay. I would, again, not investment advice, but I would say these were two great stocks to have in your portfolio. Pick one or the other. Go heavy on both. You can't go wrong. You're going to get a great, well-run, both well-run companies, it looks like.
Yep, everyone. So then let us know below your thoughts about Texas Instruments, Broadcom, one, both, neither, or do you like Intel? I'm just kidding. That's not going to be anybody's answer in this one. And if you haven't already, subscribe to our channel. give this video that thumbs up. Get the people going. Come on, everybody. We said 15K. We want to do that pack opening. Get us over that threshold.
Guys, again, this always goes out to the millions and millions of dividend investors out there. We appreciate the love and support, guys. Appreciate the subscription and liking this video. That was Bert, the Hurt, and Lanny from the Dividend Diplomats, over and out.